Hey everybody, it's Mike from Orderflows, and welcome to today's video on order flow. And what I want to talk about today is some of the interesting things in the order flow from this past week, mainly in the crude oil and gold. Now, in the crude oil on Friday, the 20th, there was an interesting sign of absorption when we got up to that high of 81.91, just around 1 o'clock Chicago time. And let me just pull up the chart here. So this is the footprint chart, okay? And you can see the volumes coming in up here at the high. We had the high of the day, and you've got a nice strong positive delta at 384. You've actually got a delta surge going into this high. You have the negative 19 delta here in this red candle, and then positive delta 52, positive delta 117, positive delta of 384, which on the surface, if you're just looking at the delta and how it's increasing, you're thinking, hey, this is bullish, we should be going higher. But that's why I always say, you have to watch also not just the order flow, not just focusing on the delta. You also need to be focusing on how price is acting, right? It's not just taking the order flow by itself. You got to be putting the order flow, which is essentially the volume that you're analyzing on the bid and the offer side, together with how price is moving along with it, right? Not just, well, I've got positive, more positive, even more positive, I got to get long because we're going to break 82 bucks and, go to, 82.50. Because what is happening up in here, why you have this big positive delta, notice the bar, it's a red candle, right? It's not a green candle. If this was a green candle and we were closing up somewhere near the high of the bar, yeah, I'd be very bullish. Now, this is a 1-minute chart on crude oil. And what happened is in the first half of the bar, it was very bullish, right? You're trading up near the high of the day. At the high of the day, you got nice, strong, positive delta. You ran into some nice resting liquidity up here. You could see even at the high, it's 62. Below it, it's 182. Below it is 126. And, at one point in this bar, you're looking at a very strong delta of plus 476. That's the max delta. So it's telling me the strongest that delta was in this bar was positive 476. You had 476 more aggressive buyers than aggressive sellers. However, price action started to diverge, because what is happening is now the market is starting to sell off. So even though you had that very strong positive delta early, price is rejecting these high levels up here at 81.91, right? And what you saw is that resting liquidity there absorbing all that aggressive buying that was taking place. How do I know? Well, obviously, the most obvious sign is the bar closed on its low, right? You sort of have this bar divergence, right, between price action and the delta. And it's actually, even though you got the strong positive delta, it's actually a bearish signal, okay? Because what's happening is that resting liquidity was up there to absorb that buying that was transacting at these new highs. But once it absorbed all that buying activity, all that aggressiveness in the market, and there was no more aggressive buying, what do you think is going to happen to price? It's going to drop. And what was interesting is once it dropped, you don't see as much volume taking place, on the bottom half of the bar as you saw on the top half of the bar. And what happens? The market starts selling off from, this 81.80 area. We get back down into the 60s and, eventually down into the 50s down in here. Okay. And, eventually we did actually go up and take out that high, or get back up there near here on the reopen on Sunday night. We got up near the high of Friday, but, on Sunday night, we just continued selling off. So, just because you're at the high of the day and you've got, positive delta coming in, you still need to take a look at what is happening with price, okay? Because that was the big tell. And, people like to compare trading to things like poker, and there's certain tells in poker, right, that just give away another trader. It's almost like the market is bluffing up here that it wants to go higher, and then the giveaway was what price was doing. Price was moving down. Had price stayed up here near the high, yeah, chances are we could still go higher, because that would be a sign that there's still some aggressive buying in the market. It just wasn't there. Now, also on Thursday, actually, I didn't talk about this on Thursday evening, but in the gold, right? You remember gold started making new highs Thursday. It really looks like gold wants to break 2,000. Who knows? Maybe it'll do it this week. 2,000 is going to be a big level. Peter Schiff, I'm sure, will be very excited at these levels. I'm sure he's excited right now. But gold was going up, okay, on Thursday. Okay, you can see we had this high coming in here at 1927. We had just made a new high at 27.5. This was at 1241. We've been going higher pretty much all day, and there was still more to this move. We made this high up here at 1241, came off and just went sideways. We didn't really pull back very much, but this high here, when we started breaking out, it was doing it tremendously. Okay, what do I mean by tremendously? What's the sign is, well, we took out the high. Okay, and you see a big bid coming here, 136, fresh buying, 179, fresh buying, the 414. So it's not only is it breaking out to these new highs, it's clearing out whatever offers are here. And it's gone bid for 136, bid for 179, bid for 400, bid for 199. All right, so you can understand that this momentum that is taking place in the market is probably pretty strong, right? There's not only do you have, people think that, markets only will go up when there's, aggressive buying, okay? And yeah, that is the most important part. You need some aggressive buying. But when you have the passive buying coming in here, right? The passive bids, the 136, the 179, to help support this market on its way up to new highs, that's the best thing that you could ask for, right? It'd be like the opposite would be as the market is selling down when you see supply coming into the market. Okay, I don't want to call this, in a sense, demand, right? Because when you think of demand, you think of coming in at lows. But when you have this demand coming in at highs, people coming into the market, bidding the market, right? When we're taking out highs, people always talk about, the institutional traders, the retail traders, and sort of the differences, right? When you're breaking out to new highs and it's sort of being run up by, retail traders, fear of missing out, they're FOMOing, they're just tripping over themselves to buy it. They're not trying to finesse their order by, working a bid at 28, working another bid at, 28 and 28.60, another one here at 29.30. They just get me in, they just buy the offer. They think it's going higher. But when you sort of see these calculated bids coming in at levels, 28, 28.60, 29.30, and for big size, that's the important thing, right? Because what's happening? We're making new highs on negative delta, and price is still going higher. So what do you think that means? People say, well, you got new highs, you got negative delta. Shouldn't the market start to sell off because you got that aggressive selling? Okay, but price is still going higher. And not only that, you could just see, right? Look at the footprint chart. That's the whole point of using a footprint chart, is to see how the volume transact on the bids and offers. And if you see big bids coming in after highs are made, what do you think that's telling you? That market is screaming at you that there's supportive buying coming into this market to sort of arrest any move coming down, right? You could just draw these lines from these big, where these big bid levels are, here, here, here. Okay, what do we do the rest of the day? Even up here, I mean, you got one here, you got the 199. I didn't even care about that one, or this 321. All I see this 136 coming in here. I see the 179. That's my clue enough. Then you get that parabolic bar right here, which just jumps up from 29 all the way up to 32. I'll say parabolic, but a nice big move up. Parabolic is a bit hyperbole there, but it's a nice move up. A nice $3 move. Very quickly, obviously on heavy volume. But look at these levels here, 28, 28 and a half, or 28.60 rather, 29.20. You can see what happened. I mean, later in the day, we still made new highs. Okay, where we come back down to test, do we test this first level here, right? We get all the way up to 36.90. around 2 o'clock. With gold, that's about the time you should, if you trade it during the US hours, that's about the time you should close your book for the day. Then the next evening session, we reopened on Friday evening, right? We're still trading all the way up, 35. But you got these levels here, 31, 30.10, 29.20, where you could see some potential support, right? So we still go higher, right? All the way up to 36. Okay, then it comes down. 8 o'clock, it gets right down to this level. You can see it bounces a bit from there. And it just hangs around that first level. Finally, it breaks through the next level, breaks through this next level. All right, then this level here is holding. So you can see how these areas of that strong supportive buying acting as support when the markets, continue to trade into the next session. Not just because you have these support levels, it doesn't mean it's going to hold forever. Like, oh, we just broke through, we created this level here at 1 in the afternoon. What time was that? 1:25, and it's going to magically hold for the rest of gold's life. No, at some point we're going to come down, we're going to test it, and eventually we're going to break it. But when you have these levels and you see the market test it here, and it's holding, these are strong levels. Okay, so absorption comes in different forms. Okay, so this is also a sign of absorption, these strong passive bids coming in as we're making new highs. Because what you have is you have buyers, this time it's passive buyers coming in there to absorb whatever people want to sell to them at the new highs. Just as in crude, right, when we got up here, we made these new highs, you had that liquidity there. That this is resting liquidity as opposed to what you're seeing in the gold, which is, whoops, the wrong gold chart. But this is the new liquidity that's coming into the market. Which one is stronger? Well, you could debate it till the cows come home, but it's liquidity. It's liquidity that's coming in to absorb, in this case, whatever selling is taking place. Whereas here you have liquidity, resting liquidity, absorbing whatever buying is taking place, whatever aggressive buying is taking place. So, I just want you to realize that, absorption comes in different forms, okay? At highs of the day, we saw buying liquidity, buying absorption, and we saw selling absorption one day in the crude, one day in the gold. So I hope you guys get something out of this video. I hope you enjoyed it. If you did, be sure to subscribe to the channel and smash the like button. Thanks, everyone. Bye-bye.